Okay, so I'm going to start off the monthly chart for crypto because usually for all assets, but especially for crypto, you want to start off on the monthly chart. And at the same time, we are in the first week of April, so that's very important. So I'm going to note the opening price here, monthly open. Right, so anticipating power of 3, if I'm anticipating that the month is going to be bullish as it currently is, we are in a bullish order flow on the higher time frames. So if I'm expecting the month to be bullish, I will be looking for longs below monthly open. So that's the minimum requirement. Okay, so heading down, before we head down, okay, so what would I need to see for price to go higher? I want to see this wick support the price. Why? Because we have a down close candle here, and this is a swing high. We have closed above this swing high, so price should not close below the consequent encroachment here. Okay, so best case scenario, price on the monthly basis do not close below the consequent encroachment here. Okay, as you can see, we are trading above the 50% of this supposed bearish fair value gap here. Okay, so we are anticipating bullish prices due to the fact that we are closing above 50%. Alright, so on the weekly time frame, now that you have got your monthly order flow, we are bullish. Okay, so heading down into the lower time frames, we are looking for a bullish bias. Alright, so within that week, the entire week can support the price. Okay, so you want to break it down into 25%, 50%, 75%, right? As long as it's within the week, you can narrow down your entries within your week, and your stop losses should be, best case scenario, outside of the week if you're entering on a weekly basis. Okay, on a weekly time frame. But as you can see, we can narrow down even further, right? So on the weekly time frame, we have this BC, and we have this swing low here. Okay, I'm gonna mark that swing low down. So this swing low should be your invalidation, right? So here you have your weekly levels and your dealing range. So low to high. Heading down even lower onto the daily time frame, you will see that within that BC there is a daily BC. So we're gonna narrow down even further, and you look for swing lows on the daily, right? So you have swing lows down here. Usually before large expansions, there is always a stop hunt. So for example, right here, stop hunt, higher prices, stop hunt, higher prices, right? There's always a stop hunt. So you're looking to buy below a certain swing low. So in this case, we have this swing low right here. Okay, and your weekly validation is this level. So from here, what can you see? You can see that we have a daily midpoint of the week here, of the fair value gap, sorry, and we have this short-term swing low. So this is the lowest low that took out this low, and this is your short-term swing low. So in the case whereby you're bullish, you do not expect the short-term swing low to be traded through. You want this swing low to hold, okay, because it has already expanded away. So right now you can zoom in even further into the lowest I go is 4 hours. Okay, so 4 hours, you can even refine it further. You have this fair value gap right here that is within the daily fair value gap, and we have this swing low as well. Okay, so you want to buy PD arrays, buy within PD arrays below swing lows. So right here you have the 4 minutes BC. right? So this 4-minute BC, I mean for 4 hours, not 4 minutes, 4 hours BC, right? This will be your entry levels. Okay, you want to enter off this area. So because this BC is very big, you look to your left. Is there anything you can key off from breakers, order blocks, or inversion fair value gaps? So the most obvious thing, the most obvious PD array that would stand out would be the breaker. Low, high, lower low, higher high. So this, the last swing high that took out this low here is your breaker. So this swing high, and then your green, consecutive green up close candles would be your breaker. But if you see that this wick is like about 25% of this entire candle here, you can use the wick as your first entry. So let's remove this fair value gap. It's within the fair value gap, okay? So you can use the high of the wick as your first entry, and your second entry would be this consequent encroachment here. As you can see, we are not reaching there. So you do not want to see this entire breaker traded through, but to be safe, your stops is here, invalidation, okay? This would be your invalidation here, and it's a very good invalidation as well, because it's a very good invalidation as well because it has taken out this swing low prior to this run higher, right? So this is a very good invalidation. So right here you have your, you can frame your setup, okay? Let's just say you want to long, you want to take the low hanging fruit, the easiest entry, okay? That would be this breaker's high, and then your stop is here. That is 5.432, okay? What are you looking for? At least the monthly opening price, right? Because we're still early in the month, okay? But if you want to be slightly more advanced, you can do this fibs, right? You project from the low, what you think would be the low of the month, you project it to the opening price, right? So let me just change it up. Projections, you'll be looking for 1 to 1.5 and 2 to 2.5. So let's just say 1 to 1.5. What can you find here, right? The nearest would be the high here. So that by itself would give you 3.7 R. And if you really want to push it, because you're bullish on the higher time frames, okay, you can push it to 1.5. That is going to be 4R. And if you push it to the maximum before any major retracements, that would be 2. Okay, that would be the safest exit, and that would be 5R. Safest doesn't mean guaranteed, but it's guaranteed to save your ass if you exit off here, okay? So that's how I gauge it. So from here you would have a 5R trade, and how much you risk, you just multiply that by 5, and that would be your trade, okay, in terms of monetary value, risk to reward. But obviously, because you're trading off the monthly time frame, you are letting the whole month play out, okay? So right here, how would you look for early invalidations? For example, if price closed below 50% of this BC here, that would be your early sign, right? Your soft invalidation. If price trades and closes below here on the 4-hour time frame, that would be your early invalidation. That you'll be like considering, okay, should I close this position or should I lower my risk, right? And as soon as it trades into this fair value gap here, right? So for me personally, I think that this should be left open if we are bullish. Okay, so for me, if price trades into this level here, I would consider cutting loss. Okay, and as well as you can use the breaker as well. So if you're using the breaker's low to the breaker's high, as you can see, it lines up very nicely with this fair value gap here. Okay, this is the breaker's high, breaker's low, mean threshold. And if you really want to push it, you want to tighten and refine it to the maximum, you can do this, the body, the breaker's body, right, your mean threshold, and still it's within this fair value gap here. So this is very nice in terms of setup wise, right, from the higher time frames narrowing down to the lower time frames, and everything matches up nicely in sync. You can just enter off this area, catching the knife but with precision. That is how I would do it. And if you have been watching my trade idea videos on my Telegram group, you would have noticed that I'm able to catch the exact lows. So yeah, that's how I would engage AVAX, right? So maybe you can study this whole idea of planning and then just waiting it out, and maybe you might find it easier, because this type of entries, once you see like for example a short-term high on your entry, so for example you took this entry here and this high is taken out. Once you have a closing price above this high, you can basically move your stop loss to break even to this low right here, right? So you're almost at break even, but you want to put it at this low. And then the next level would be so here's the update from the previous video. So as you can see, right up here was the time whereby I have sent the video, and notice how price did not reach above these highs. So in this case, you don't shift your stop loss to this low here. You need to wait for a candle closing price above this swing high here to shift your stops here. So what does that also mean? That also means that this trade idea, this original trade idea, is still valid. Okay, so since you have missed it here, you could have entered off this area here, right? Because it's still valid, price has not closed above this swing high here. So your second entry, since it has tagged the first and it still refused to trade higher, it is probably going to reach into the second PD array, and that would be your second entry. And your second entry would be the consequent encroachment of this wick here, and there you have it. And obviously the final entry and the best perfect entry, that would be the opening price, the closing price of this up close candle here as the breaker's closing price. Okay, the body of the breaker. So there you have it. You have 1, 2, 3 entries in general, but because we are bullish, I only aim for the low-hanging fruit, the high and the midpoint, right? If it goes to the opening price, I might set it, but sometimes I don't set it at the opening price, right? So let's just say if I take on full risk within 1 and 2, the opening price doesn't really matter, right? But in an event whereby there is a really long wick, I might let me rephrase this. Okay, in an event that the wick is not this long, I will put the second entry at the closing price of the breaker for this particular scenario. Okay, so you reverse it if you're bearish. So let's just say the wick here looks like this. Okay, I will immediately go for the high and the body of the candle, disregarding the consequent encroachment of the wick. Make sense? So that's how I would engage it. And right now, as you can see, because we have taken out this swing lows here, once we have a closing price above this swing high, so this is a new short-term high, okay, which you can see right here, you can actually shift your stops here. So from here, this was your original stop, you can shift it all the way down here, and notice that your entry is here and here. So you're really limiting your risk exposure, right? So let's just say your entry is right in the middle of this two, and then your stops will be here, that is 2%, and you're aiming for that monthly opening price. That would be, where is it? Right here. That will be 19, 2:19. So right now your risk to reward is adjusted again, right? So 19% for 2% risk, right? And since it has closed another swing high, right? So for example, right here, you can shift your stops down here if you want to be really aggressive. So if you shift your stops right here into this swing low, you're basically at break even, so you're at zero risk right now. Okay, and yeah, that's how you catch lows at a high precision, with a high precision. Okay, and yeah, that's just a small little update. We shall see if price wants to trade to that swing high above here eventually at the end, by the end of this month, or somewhere around here by the end of this month, right? So we shall see, or maybe we just step above the opening price and then reversed. Okay, anything can happen, which is why you want to trail your stops as soon as a short-term high is taken out, right? And the lower you risk, the better you are, or the higher probability that you are going to hold your positions, because you will not be worrying like, what if it runs against me and stuff like that, right? Because this thing repeats, so you can basically keep trying until you get that explosive move, right? But obviously I would recommend taking partials along the way. All right, so for example, if it reaches the opening price, I'll take a partial here, and then I'll basically just let it ride up into this high, and I'll watch the reaction, right? And that's how I would manage this particular trade. Okay, and that's it for this update.